This is week 12 of investing every week in the stock market. I started this series to document my journey in the stock market in the hopes other people might get motivated to start investing or stay consistent with their own investment journey. If you're interested and want to follow along, smash the like button and the subscribe button. This week we have around $1,000 to invest, $500 in new deposits, and money that I receive in dividends in all of my accounts. My first buy, as always, is going to be in the S&P 500. The S&P 500 is an index that tracks the 500 biggest companies in the United States of America. I like this ETF called VFE, that is a Vanguard product, but you can choose any ETF that you like. There's tons of Vanguard ETFs, BlackRock ETFs, and other provider ETFs also tracking the S&P 500. Why I like the S&P 500 is its strong growth record. Its return on average 10% over the last 3 decades, and I want to partake in this as a younger investor that has decades to invest. Hopefully. So 2 shares of the S&P 500, cue the order, and done. My next buy is going to be in the NASDAQ 100 through this ETF called HXQ, a Global X product. The NASDAQ 100, much like the S&P 500, tracks 100 of the biggest companies in the United States of America. The only caveat is that most of these companies are big tech companies, meaning that this ETF is heavily focused on technology. If you think technology is not the future and is not going to add value, you might want to stay away from this ETF. But I think technology is going to add tremendous value in the future. Any forward-looking industry like AI, robotics, data has technology, and tech companies are going to be the first to capitalize on any new wave. You can see the 5-year growth rate is actually ridiculous at 160%. Of course, that's not realistic and indicative of future growth rate, but I think technology has a lot to offer, which is why I'm going to buy 1 share of the NASDAQ 100, cue the order, and done. My next buy is going to be in a leverage S&P 500 ETF through this ETF called USSL. The S&P 500 we've covered before, but what is leverage? Leverage essentially adds on to the returns of the ETF. This ETF that I like, USSL, is 25% leverage, which means that whatever returns the S&P 500 generates, this ETF is going to generate 25% more. For example, if the S&P 500 increases by 10%, this ETF is going to go up by 12.5%, minus leverage cost, or the cost of the interest the ETF provider has to pay. But the opposite is also true though. Let's say the S&P 500 goes down 10%. This ETF is going to go down 12.5% plus leverage costs. You can see the pros and cons here. I like investing in moderate leverage because I think it's going to magnify my long-term returns, once again because I'm a younger investor. So I'm going to buy 3 shares of USSL, cue the order, and done. My next buy is going to be in a leveraged NASDAQ 100 ETF. The investment philosophy is extremely similar to the leveraged S&P 500 ETF. This ETF, QQQL, is going to add 25% onto the returns of the NASDAQ, and for a long-term investor like myself, who does believe the NASDAQ 100 is going to have tons of room to grow, I think it's a good deal investing in moderate leverage. Nothing crazy like 2x or 3x leverage, but 25%. So I'm going to buy 2 shares of QQQL, cue the order, and done. My next buy is going to be in Pepsi. Pepsi is a company that needs no introduction. It has products that literally every household has. Foods, snacks, beverages, anything that you can think of, Pepsi probably has a brand for it. And as you can see, it's not done well in the last year, being down 13% nearly. Even for the 5-year chart, it's only up 6%. So why am I choosing to invest in Pepsi? Well, I think Pepsi's suite of products is going to stay there for decades to come. And with the rising costs of goods and services, I think Pepsi is going to be able to expand revenue and also expand its margins. It also has some room for international expansion as the middle class in developing countries expands. And a big part of my philosophy investing in Pepsi is also the dividends. Right now, it has a dividend yield of 3.7% since it's been beaten down in price so much, and I think they'll actually be able to protect this dividend and grow it in the future modestly. Even at a 5% growth rate, I can see this dividend doubling in decades to come, which is why I want to invest in Pepsi for pretty much all of the reasons that I've listed. So 1 share of Pepsi, cue the order, and done. My next buy is going to be in HEQL, a leverage all equity ETF. Leverage, we know what it means, but what is all equity? It essentially means that this holds companies not just in the US and Canada, but also internationally. Something you'll notice with my portfolio is that I'm very North America centric. This is my way of getting some international exposure. And if international markets do well, I'll be able to participate in those returns quite significantly. So I'm going to buy 1 share of HEQL, cue the order, and done. My next buy is going to be in the Canadian market through this ETF called VDY. VDY is a Vanguard product that tracks pretty much the TSX 60, which is the Canadian version of the S&P 500. Banks, insurance companies, healthcare companies, telecom companies, all of the Canadian oligopolies that I love and appreciate are included in this ETF. The kicker is that it also pays a nice dividend at around 4.2 to 4.5% depending on the price of the stock. The yearly performance is actually good at 17%, adding on the 4% dividend, a total return of 20% per year is pretty magnificent. My goal with this ETF is to hold for the long run as companies increase their dividend and the Canadian economy expands, hoping to partake in this nation that we love and appreciate a lot. So I'm gonna buy 1 share of BDY, submit the order, and done. My next buy is going to be an HYLD. This is a covered call ETF tracking the S&P 500. What are covered calls? Covered calls are essentially an option strategy that sacrifice some long-term potential growth to give you income now. These ETFs are extremely controversial in investment circles, and people are literally willing to fight each other really hard to defend their side. But I choose to invest in covered call ETFs to get that yield now, to keep me motivated to build my portfolio. S&P 500 has a yield of 1%. Covered call ETFs tracking the S&P 500 have yields of 11%. I don't invest a lot of money, as you'll see, only $41, but I want to keep that dividend snowball rolling and keep myself motivated. So I'm gonna buy 3 shares of HYLD, queue the order, and done. Dealing with leftover money in my RRSP, I'm just gonna buy 2 shares of VDY, queue the order, and done. The only account left is my FHSA. That is the first home savings account that I can use to buy my first property. Wow, so exciting. And to keep my money safe, I'm just gonna buy an all equity ETF. The growth for this might not be that high, but I think the drawdown also is not gonna be so low, which will allow me to withdraw this money and put it towards a down payment. So 2 shares of HEQL, submit the order, and done. All right, that's it. Those were my buys for this week. Let me know what you bought in the comments below. I'm always interested to know what other investment options are out there so I can also participate in those gains. As always, smash the like button and the subscribe button. Every subscriber helps get this video to the right people, also interested in learning how to invest, how to save, and just improve their relationship with money. I'll see you next week.